Good evening and welcome to this session of the live virtual coaching classes organized by the Board of Studies of the Institute of Chartered Accountants of India. We had already begun this topic yesterday in the last session, Prevention of Operation and Mismanagement, chapter 16. Okay, so, and one thing we found was the essence of corporate democracy. The essence of corporate democracy Is it okay, sir? Can we continue? Okay. Sorry for that minor disturbance, which due to a connectivity issue here at my end, power problems. Now it's, I hope, better. So I'm just waiting. We also saw the logic behind the rule. And of course, my guru's view on why this rule is still universally applicable. Having said that, what is important is the exceptions to the rule. The first three are pretty much easy to understand. But the last one, see, normally the majority, once they have decided, that is the end of it. Minority cannot do anything. Minority cannot file a suit or go to tribunal. But if the minority is able to show, if the minority is able to prove that the acts there are acts which are oppressive of any minority, not necessarily minority. In fact, when you get into the section, I will tell you, any member or members is being oppressed. There is oppression or there is mismanagement of the affairs of the company. The affairs of the company are being conducted in a manner prejudicial to the interest of the company. If this is shown, then the whole thing changes and you have a whole different approach where you will find that the minority can file a suit. Okay, so who are we here? Kaushiki ji is here, Viraj Desai is here, Namrata is here, welcome madam, and Mr. K. Prashant again, thank you, and Palapati Sudhir, wonderful. So welcome all of you, and this is a nice interesting topic, straightforward topic where it's a facility available to certain members when there is oppression or mismanagement of the affairs of the company. Jumping directly into the section, we will get into 241, right? 241. Now, 241 talks about a complaint made by any member of a company. 241 1A. Any member of a company, please note that point, any member of a company, and it's very important. Any member of a company may complain that the affairs of the company have been, I've put a circle around that have been, because the past is indicated here. Have been. Any member of a company may complain that the affairs of the company have been or are being conducted in a manner prejudicial. So, past act also covered. Currently, what is happening is also covered. So, the complaint is the affairs of the company have been or are being conducted in a manner prejudicial to public interest, prejudicial or oppressive to such member or any other member, or prejudicial to the interest of the company. They have the right to complain under 241 1A for oppression, relief from oppression. So 241 1A is relief from oppression. Now, unfortunately or fortunately, you're welcome, Mr. Sriram. Though you are late, better late than never. Welcome. So the act, fortunately or unfortunately, does not define the word oppression. We simply have to understand it in its normal dictionary meaning. An act which is unbearable is oppression. An act which is hurting me and it is unbearable, that is called oppression. The essence of the matter is, in another case law, including Kalinga Tube's case, the court has explained oppression in this way. The essence of the matter seems to be that the conduct complained above, the lowest level, involves a visible departure from the standards of fair dealing and a violation of the conditions of fair play on which every shareholder who entrusts his money to the company is entitled to rely. On the lowest level, meaning, for example, not sending notice of general meeting to certain members, or when certain members raise questions, not answering them, pointedly ignoring them. These are all classic examples of oppression. More so when the company is a closely held company and there are two groups, two factions. So in the boardroom also this could happen, but though this section is not available to a director, he can complain only about acts done which are oppressive to him as a member, as a director. But usually the fight will get transferred to the general meeting also. So the board meeting, there'll be a fight. Then the general meeting will be called. Whatever topics you studied, in your intermediate relating to EGM, extraordinary general meeting by requisition, will have relevance here. You see, because most of the time when there is an oppression or mismanagement, the directors will refuse to hold a general meeting for discussing these matters. It is only at that time that the complainants will want to call an EGM by requisition. That is why if the directors do not hold it, the requisitionists themselves can call, hold and conduct it. Okay, within 3 months. So the point here is of the date of deposit of the requisition. So all that becomes relevant here. The burden on the shareholder who is complaining must be unjust or harsh or tyrannical. The unjust act must be done persistently. Though, of course, here the words are being conducted would indicate that the acts complained of should be continuous. Still, the word have been is also used. So have been means past. So even an isolated past act could be considered today in the new law. Whereas in the old law, the words used only were are being conducted, which meant the oppression should be continuous and present. Past isolated acts cannot be taken. But today, even a past act of oppression can be considered. Okay? The oppression is a continuous course of conduct that is harsh, unfair, and burdensome. Even if it is in the past, it can be considered. Now, under the current law. But seriously, this is silly. because the law was very correct. In the old law, very clearly did not talk about the past, because once you allow people to go back, all sorts of cooked up complaints will start coming up. Last year when I came, you didn't respect me, all that sort of thing. So the word, but still, in their own wisdom, they have included have been also. So that is it. And we have 241(1)(a). We saw that. Now try to analyze it. We find under section 397 of the old law, which I was just talking about, 397 dealt with operation, 398 with mismanagement. Now they have combined it in one section, 241, 1A and 1B. God only knows why. Anyway, that is their choice. Under section 397 of the old law, operation must be continuous. Past acts of operation will not entitle a plaintiff to seek remedy under section 397. Plaintiff means plaintiff. If you're having a doubt, what is the meaning of the word plaintiff? Plaintiff means one who is making the complaint. The person who is affected, who is making the complaint, he is called plaintiff. In a civil suit also, he is called plaintiff. He only initiates the whole thing. The opposite party is called defendant in a civil suit. In a civil suit, he is called defendant or respondent. Here they will be called respondents. In a tribunal, under 241(1)(a), the other party will be called respondents. Okay. But since now the words have been are included or covered, operation can be past or continuing behavior. Okay. Now the words used are any member. I told you to mark it. Since the word any member is used, our understanding is that there is only a lower limit. Later on, you'll be seeing there is only a lower limit, no upper limit. So the operation can be of the majority also. This section does not specifically identify minority and protect them. Minimum is given, but even a majority who is victimized or who is oppressed may complain under this section. How that will happen, I will tell you in more detail with a real incident as we go in. Okay, so it's a very real thing. I was very much a party to that activity. I mean, in the sense, I was involved in that case, but I will not reveal the name, but rather I would tell you the story, but you will have to take it up. I can't give the names for obvious reasons, but I'll give you a broad idea. No, but of course it's a tribunal case and it's available in the tribunal. Now, so very, very important. Majority may also complain under this section. Okay. Operation includes acts which are conducted in a way prejudicial to the public interest. So this does not include only shareholders, but also economic and social policies of the state. So that also could be affected, right? Because the earlier law, public interest was not included here. And now also it's not fair because this is meant to protect a group of shareholders who are being oppressed. That's all. That is the purpose of 241(1)(a). Okay. Because to protect the public interest, you have central government is there. They can take direct action on if there is a prejudice to public interest. There is no need to go through this section. Now, some practical problems. 60% of the shares of Indo-French Limited are held by a French group and the balance by the Indian group. So 60% by French, 40% by Indian. As per the group, as per articles of association, both groups had equal managerial powers. Though French is having more, they had equal. So the relationship between the two groups soured, became bad. Sour means became bad, become bitter. And the operations of the company reached a deadlock because they are having equal managerial power now. So the Indian group approached the NCLT for action against the French group. Okay. Now, whether the contention of the Indian group that the foreign group is acting in a manner oppressive will sustain, what relief can the NCLT grant? So this is a question asked in the examination. What I have done is, not only have I given you the answer, I have also given you here the format in which the answer can be presented. Whenever you are writing an answer in the law paper, ideally it should have 4 parts. I've given only 3 here. The second part is something I don't have to waste because already it's given here. Okay, I've given it here. So first you summarize the facts, represent the facts in such a way that they will become now relevant for your answer. Whatever is stated in the problem, redraft it. So the two groups enjoy equal amount of managerial power under the articles. Due to misunderstanding, there is deadlock. In a situation like this, where the rival groups are equal in strength, there may be no oppression at all. This is a conclusion, but first let us establish that there is a deadlock, equal managerial powers. So this view is supported by the decision in Jnana Sambandham versus Tamil Nadu Transport. Whereas there is a deadlock in management, there cannot be oppression. Okay, but if still the deadlock is going to result in problem to the public interest, whatever, then the tribunal may direct either group to buy out the shares of the other. And failing which, later on you will see, the tribunal can pass an order that the company may be wound up on the grounds that it is just inequitable. So to do, because differences are not going, both are equal. What is the point? Dissolve the company, you take your money, let him take his money, be happy. Or one of you sell to the other, you are not agreeing, then break up, take the money and go. So these are the solutions that the tribunal can give. Later on, when you come to 242 powers, we will see all these powers are available. So here what I'm understanding is where there is equal managerial powers and deadlock due to misunderstanding, there cannot be oppression. There is an understanding I'm getting. So as the two groups are equal in strength and there is deadlock, there is no oppression. If at all the NCLT decides to grant relief, it may order the foreign group, which holds 60%, to buy out the minority Indian group. Yashovardhan Sabu versus Gross Pickard Sabu Limited. So these are the way I have written it. You can try to look at it again. When you're getting the PowerPoint as a PDF, look at it again. See how separate paragraphs are used, and clearly you have a logic of application of the law, how it is done, so that clearly the examiner, when correcting the paper, will be able to give marks. More about this later. Now we move on to 241(1)(b), which deals with mismanagement. Mismanagement. Here also they use the word any member of a company. Okay, any member. Of course, later on you will find that there is a minimum number criteria. The members who are complaining should have a minimum number. Under 241(3), you will find minimum number criteria is given. Now, the material change, so any member of a company may complain that the material change has taken place in the management and control of the company. Material change has taken place in the management and control of the company, whereby an alteration in the board of directors or manager, or in the ownership of the company shares, or if it has no share capital, in its membership, in any other manner whatsoever. So there is going to be a change in the management and control of the company, because of which the board of directors may be replaced, or the ownership of the company shares may change, or if it has no share capital, its membership may change, or any other manner whatsoever. And by reason of such change, because of this change in management, it is likely that the affairs of the company will be conducted. See the use of the word. It is likely that the affairs of the company will be conducted in a manner prejudicial to its interest or its members or any class of them. So here they are restricting to members. Here they are saying there is going to be a change in the management and control, because of which there may be change in the directors. The new directors we know are absolutely fraudulent fellows. Here are their background. And because of this change, it is likely that the affairs of the company will be conducted in a manner prejudicial to its interest, because these people are non-compliant people. They will not pay taxes. They will siphon the funds. Later on, the company will be in trouble. Or because the company is in trouble, we will be in trouble, because ultimately members are the sufferers. So they may borrow heavily and not pay. Then, like when Mr. Modi, Nirav Modi, they may run away. So if this happens, then the members will be affected. Therefore, huge debts will be built up, etc. So in order to, protect them, they'll say, please do something. Now, so we have 244 talks about 244 gives the number of members having right to apply. Very important section. When I come to that, I will tell. 244 talks about the number of members who are right to apply. So that if the number of members is sufficient, they have the right to apply, then the members can themselves make an application. I'm sorry, I'm just checking for my... see, that I am now in a place called Coimbatore in Tamil Nadu, and the power supply is a little problematic here, and it's going and coming and going, and so whenever it goes off, I've changed over to another connectivity which is stable, so no, that's not going to be a problem for us. But coming back, if the members have the right to apply under section 244, no problem. The members themselves can make the application under 1A or B. 1A oppression, B mismanagement. Or the central government is of the opinion. So these guys feel that they are not having sufficient numbers. So they run to the Ministry of Corporate Affairs and they fall at the feet of the ministry. And they say, kindly look at all this data, see what's happening here. Then the central government forms an opinion that the affairs of the company are being conducted in a manner prejudicial to public interest. This need not necessarily be because of any request from members. Suo motu, on its own motion, based on some records available with it, central government may form an opinion and it may make an application to the central government. So, under 241, members can apply, central government can also apply. That is 241. 241 1A and B members, but provided the members have the right to so apply. So only the members having the right to apply. Okay. 241.3 is an independent section. It is the initiation of case by central government against managerial personnel. 241 1A B members. 241.2 central government. Against the complaining against mismanagement operation. Here, specifically, they are targeting managerial personnel, the persons who are managing the affairs of the company. So first, the central government should form an opinion. And please note, 241.2 is the application for relief from oppression or mismanagement. Alag. 241.3 is a totally different subject. This is against the managerial person. In the opinion of the central government, there exist circumstances suggesting that any person concerned in the conduct and management of the affairs of a company is or has been in connection therewith guilty of fraud, misfeasance, persistent negligence, or default in carrying out his obligations and functions. See how many words are used. Fellow has been guilty of fraud. I think we know what that is. Misfeasance, we already told. Misfeasance, doing with a good intention, but in a wrong way, non-compliantly. So your intentions are good, but what you have done is wrong. See, one more thing about intentions. Your intentions may be honorable to the core, but if the result of it is going to be hurting people or thing, then there is no point in talking about intention. But of course, sometimes courts and tribunals, when they are giving condemnation for delay or other matters, they will have look at what was your intention, honorable. Your intention was not to willfully and wantonly do it like that. But still, that can only have a small limit. But broadly speaking, if you are not complying with the law, your intentions have nothing to do with it. Non-compliance is non-compliance. You cannot say, sir, I'm a good man, I normally will not do, right? You're done now, right? So there is a misfeasance. Persistent negligence. Persistent is the operative word. Negligent, okay. Once, okay. See, once you are supposed to do, you don't do. Every time your PF, you have to pay on the 15th of every month. 1 month you didn't pay it on the due date, no problem. You lose it anyway in income tax. Every month you pay on the 21st or delayed beyond 1 month. This is persistent negligence. Default in carrying out obligations and functions under the law, not necessarily company law, any law, or breach of trust. See, I'm going to talk to you about one thing which you may not consider it to be relevant here, but think about it. TDS, you are deducting from a party. It is not your money. Please, some CFOs, especially members of our institute, when they become CFO, Mr. Srikanth, I'm rotating the money on the 5th. Exactly on the 6th, I will pay it off. I said, look here, it's not your money to rotate. It belongs to that guy. Instead of paying it to him, you're paying it to the government on his behalf as TDS. And the government, in all its mercy, gives you time till 7th of the next month. That's about it. And because the time limit is there, you can't keep rotating it. Keep it in a separate account. Or keep it in a place where you don't use it. Fold it and keep it. This is my view. So this is, if you don't do it, it's a breach of trust. Because tomorrow, because of this, what happens on 7th, you don't have the money. So then you don't pay. Then with interest, you pay 1 month later. All that, or don't pay at all. And then it starts accumulating. And then suddenly you find for 1 whole year, you have not paid the TDS. Then the TDS authorities come. They levy penalty. So all this is nobody's fault. It's not your money. Similarly, GST that you collect, it's not your money. Pay it. Anyway, there is a slight difference because the law requires you to pay in advance. So there they are giving actually a liberty. Since you are paying in advance, but whatever you have up to 20th, you should keep track. These are all financial discipline. Because every 19th of the month, you should initiate the payment. So at the 20th, you have paid it. The GST should be paid. Okay, so it may sound like I'm wasting your time, but not really. Think about it. These are all breaches of trust. You don't pay it. The business of a company is not or has not been conducted and managed by such persons in accordance with sound business principles or prudent commercial practices. See, this section goes beyond normal. You cannot say, sir, which section talks about sound business principle? Where in which law there says prudent commercial practices? Sir, please quote section number. I don't know. Sound business principle practices. Businessmen know. I have worked with very senior business people, businessmen. For over the last 40 years, I've worked with them. I'm sorry, over the last 30 years, I've worked with them. Our firm has worked with them for the last 50 years. Now, that being the case, they know what is sound, yeah. How much you can borrow, there's a gut feeling. No law, no book. No, you are financed, search all your finance textbooks. All the research conducted by IFMR, IIM Bangalore, everywhere, I asked them to give me one indicator of so much debt can be there for a company. One indicator and say, sir, this much debt is good. Even the so-called 2:1 is only a thumb rule. Okay, so what is good, what is bad, that man sitting in the seat only knows. Nobody else can judge. But when he does it correctly, it is sound. So generally, lower debt is better. That is a sound business principle. Don't overtrade. Don't leverage too much. But doesn't mean that you should not borrow at all. Borrow. I mean, that's what I'm saying. Unless you know what it is you want. Sir, please show me the book where it is. The bookish approach. Where nobody can, even in finance, if you have a bookish approach, no, in real life, you can never succeed. Because in real life, it's a totally different thing. What you study in your textbook, you will not find in the real life. Maybe to some extent, terminologies and all you might know. But the reality of the decision you take there is totally different. And some terminologies you will bullshit and you will talk like that as if nobody knows anything. But bottom line, everybody will know what you're talking about. If your company is worthy, we will lend money. If your company is not worthy, balance sheet will talk. Why you need not talk? Balance sheet will talk. We know how to analyze the balance sheet. Whatever words are, the way you speak the words and the way you write the report, bottom line, we know the balance sheet and what can be done, what cannot be done. A company, so these are all sound business principles and prudent commercial practices. A company is or has been conducted and managed by such person in a manner which is likely to cause or has caused serious injury or damage. SID, serious injury or damage. SID, I abbreviate it as SID, to the interest of TIB, trade, industry or business. See, what a great person, no? Not only is he damaging his company, this great MD, and wonderful human being, he is capable of causing serious injury or damage to the interest of the trade, industry, or business. See, when Mr. Ramalinga Raju did what he did, the entire IT sector got banned. For at least 1 week, they were banned. Because the minute that happened, everybody, IT companies, be careful, because the Satyam goes down, everybody goes down. Huh? But that was very shortly. Once they realized that it was highly localized issue with Satyam and that nothing is going to happen to the IT space. On the other hand, there might be better opportunities now that Satyam is out. Immediately, other companies started picking up and moving. And Tech Mahindra got its golden opportunity to come in and take up its position as possibly the third in the, the IT space in India today. Arguably, I'm not trying to say it. I think it is the third. If you TCS, Infosys, then I think this is the third. Then there are, of course, a whole lot of them. L&D Infotech, Mindtree, LT Mindtree, then you have Wipro for that matter, so on. So. Okay, so though Wipro would be bigger in size, but don't forget that it's a conglomerate business. It's not an IT company. It has an IT business, but its balance sheet is not pure IT balance sheet. That makes it very peculiar company. Okay. So the business has been, so this Satyam, Mr. Ramalinga Raju was capable of damaging the entire industry for some time. What a great man. The business of a company is or has been conducted and managed by such person with intent to defraud its creditors, members, or any other person. Mr. Nirav Modi will come under this category, correct? He was conducting the affairs of this company with intent to defraud the bank, members, or the creditor in this case, bank, members, or any other person. Or otherwise for any fraudulent or unlawful purpose. See, the intention is very important here. See, there was a bank called Global Trust Bank. The bank got totally insolvent because of the promoter, the owner. At that time, the CEO, Mr. Gelli, he was taking a huge risk. See, he was trying to show high income. And one way he could do it was in the investment part of the banking business, where he traded on the KP shares, Ketan Parekh shares, which initially showed good return. So for 2 years, the company was able to do good. Then 1 year they lost money because of KP share. At that time, Gilly started playing games in the financial statements. And of course, there again, the auditors were Pricewaterhouse. So they sort of all sorts of games were played. But then finally, even with the games, GDP collapsed. Luckily, the central government, RBI and Ministry came into the Ministry of Finance came to the rescue, and GDP was taken over by the Oriental Bank of Kampu. Chanda Kochar, intention to defraud. So you knew very well what you're doing is wrong. And then you go ahead and do it. You're knowingly doing it. So intent to defraud its creditors, members, or other person, or otherwise for a fraudulent or unlawful purpose, or in a manner prejudicial to public interest, right? The CGMA, once the central government is satisfied that one of the above 4 conditions is satisfied, then they may initiate a case against that person and refer the same to the tribunal under section 241(3) with a request that the tribunal may inquire into the case and record a decision as to whether or not such person is a fit and proper person to hold the office of director of any other office connected to the conduct and management of any company. So at the end of the day, tribunal only pass an order. We find that the allegations are proved to be true. This gentleman is not a fit and proper. Why I use the word gentleman? I'm sorry. This fellow is not a fit and proper person to hold the office of director or any other office connected to the conduct and management of a company. This is 241(3). The person against whom the case is referred to shall be joined as a respondent. So the company will be the prime party. Then this gentleman will become I'm sorry to keep on calling him a gentleman, but till he is proved guilty, he is a gentleman. He will be joined as a respondent. Every application under section 241(3) shall contain a concise statement of the circumstances and materials as the central government may consider necessary for the purpose of inquiry. Central government cannot wake up in the morning, the regional director cannot wake up in the morning one day and decide, hey, I will file a complaint against the MD of Tobacco Limited. No. MD of Tobacco Limited, when I met him in the party, he spoke very rudely. I don't like that fellow's face. I will initiate proceeding. No. There should be some material. There should be some documentary, something to show that there is a thing there. And it shall be signed and verified in the manner laid down Because tomorrow, if any false allegation is made, then the whole thing will change. The person against whom this complaint came will become the aggrieved party. He can go to court and file a civil suit for damages because his reputation is affected now. So whoever is responsible will get caught. So at the conclusion of the hearing of the case, in respect of subsection 3 of section 241, the tribunal shall record its decision, clearly stating therein specifically as to whether or not the respondent is a fit and proper person. Okay? If they say he is not a fit and proper person, then he cannot be appointed as a director of any other company. Do you remember? Where the tribunal passes an order that he is not a fit and proper person, he will vacate office. And he will also be disqualified for a period of 5 years, or unless the tribunal gives leave. Right? So this is how the disqualification ground comes. Okay. Who can apply? Very, very important. I don't know, I'm not getting any responses after Prashant's aggrieved word. So let me quickly ask you, hey, are you there? Are you guys there? Just give me a conclusion. Yes, we are there. Like that. Somebody, because this is very, very important. Exam point of view, very important. The members having right to apply should remember this. In the case of a company having share capital, not less than 100 members of the company, 500 members totally, then 1/10 is enough, or whatever, 1/10 of the total number of members, or 100, whichever is less. Okay. So you first calculate number of members, count the number of members, then see what is 1/10 of the total number of members, whichever is less will be there. So, okay, suppose even this is not satisfied. One more benefit. Or any member, even a single member or members holding not less than 1/10 of the issued share capital of the company. So, not less than 1/10 of the total number of members, whichever is less, or any member or members holding not less than 1/10 of the issued share capital of the company. Very surprising. Wherever we found any limit being prescribed earlier, even in those days when you studied intermediate management and administration, it was always linked to paid up capital. Correct? But here for the first time, you are seeing issued share capital. Why? Why is it issued share capital? I'm not going to answer it now, but I will answer it. Don't worry, but not now. But if you have any ideas, why issued capital? You don't know what is issued capital. Authorized capital, then subscribed capital. Sorry, issued capital, then subscribed capital. Issued capital is the number of shares which are being given, which are being offered to the public through the prospectus, or for which the company is willing to accept applications. So the number of shares for which the company is willing to accept applications, that is called issued capital. Of course, members may give check, members may give a application form. Then when the company allots these shares, they will become members. They will become holders of subscribed capital, paid up capital also. In case it is fully called up and paid up, fully paid up. Otherwise, you will have to again subdivide it, right? Subscribed, called up, paid up. So, whatever it is, okay. Then there will be some uncalled portion also. The applicant or applicants should have paid all calls and other sums due on his or their shares. See, here clearly they are saying, see, there is no single general rule. Joint shareholders should be taken as one member or two members. Every section that deals with the subject will tell you. Here, joint shareholders can be taken as one member. So for counting 100 members, we should take joint shareholders as one. Please don't forget that. If there are 20 people, joint shareholders, then they have taken as 10. Okay. Company not having share capital. Not less than 1/5 of the total number of its members. Because it doesn't have share capital now. So, not less than 1/5 of the total number of its members. Now, in case these two conditions are also not satisfied, tribunal can itself make an application. You know that 241 subsection 2. But suppose they feel, if we won't make an application, you guys, you make it, man. No, we are not having 110, 100. Okay, then wait. Tribunal, you make an application to me. Tribunal may, on an application made to it in this behalf, waive all or any of the requirements as to minimum number. So tribunal has been, this power was not earlier available. So now they have given the power to the tribunal. So that will be a separate application. Before the 241 1A or B application is accepted or admitted, there will be a petition saying, we are the members. Prima facie, these are the issues. They will not be taken upon merit. They will not be taken upon merit because that's going to come later. Whether there is oppression or not is a later question. Right now, what the tribunal will see, broadly they'll see what are the issues raised. Are they frivolous or serious? Should these guys given an opportunity to bring it up at all? So if the tribunal finds it looks suspicious, man. Even though these guys are not having enough member, let us come. Let's take it up. So I'm waiving the requirement as to minimum number. Go ahead and apply. Once that order is passed, based on that order, they will make an application under 241 1A or B. See, in a way, this is nice. Earlier, this power was not there with the tribunal. In fact, all those days, this power of relief for oppression and mismanagement was with the High Court, the jurisdictional court, High Court. Okay, whereas now it is with the tribunal, which itself is good. And you will learn more about tribunal in your final. There's a separate topic where you will be taught about the NCLT, its powers and all. The National Company Law Tribunal. It's a quasi-judicial body. It's like a court, but not a court, but somewhat less procedure, but still there are certain procedures to be followed, etc. Non-lawyers can also appear. For your information, you as a future chartered accountant, once you become a chartered accountant, you are entitled to appear before the National Company Law Tribunal. Yes, you can. Think about it. Okay, you can appear before the NCLT, NCLAT also. After that, you can't go. From NCLAT, you'll have to go to Supreme Court. There you can't go. But up to NCLAT, you can go, yeah, which is something great. If you want to specialize in this subject and become an expert, go ahead. And this is the type of cases that will come to you. Operational mismanagement. So somebody wanted to become a tribunal member. Yes, you can. Route is here. Keep appearing before the tribunal. Gain experience, then will be considered. The issued, subscribed and paid up share capital of ABC Nidhi Company Limited is 10 lakhs, consisting of 90,000 equity shares of rupees 10 each, fully paid up, and 10,000 preference shares of rupees 10 each, fully paid up. Out of members of the company, 400 members holding one preference share each, and 50 means 400 members, and 50 members holding 500 equity shares together, applied for relief under section 241. As on the date of petition, the company had 600 equity shareholders and 5,000 preference shareholders, right? So total number of equity shareholders, 600, preference shareholders, 5,000. Examine whether our petition is maintainable. 400 members holding one preference share each and 50 equity. Okay. So this is a question on the requisite number. First, for making an application under section 240. Total number of members is 450. Okay, the members who are applying is 450 members. See, here we are not distinguishing between preference and equity. 450. The criteria of not less than 100 members is satisfied. Straight away the application is valid. You understand? Total number of members should be 100 or 1/10 of the total number of members. 1/10 of total number of members would be 5,600. 600 equity and 5,000 preference. So 560. 5,600. 10% of 5,600 would be 1/10 would be 560. Whereas this is only 450. Still, it is more than 100. 10%, 1/10 or 100, whichever is higher. So you need not bother about the 1/10 of issued capital and all. Straight away, they are satisfied. Next question. As on the, will your answer be different if preference shareholders have subsequently withdrawn their consent? Very important. See, at the time of application, they were there. Subsequently, they withdrew, which means 400 guys will go away, leaving only 50. Got it? But the fact that the preference shareholders have withdrawn their consent subsequently would not affect the maintainability of the petition. The withdrawal of consent will not affect the maintainability of the petition. Once petition admitted, it will be going on. This was decided in a case, Rajamundry Electric Corporation versus Nageshwar Rao. You can try to remember the case. Okay. I want you to give an answer for this because I'm worried that some of you have gone to sleep. So let us see. ABC Private Limited is a company in which there are 8 shareholders. Can a member holding less than 1/10 of the share capital of the company apply to the tribunal for relief against operation and mismanagement? So he is holding 1/10 of the share capital. He should paid up whatever, all told. Now, there are 8 shareholders. Can a single member holding less than 1/10 of the share capital apply? Can I have some answers for the first one? The light blue colored area. If you want to. So there are 8 shareholders. One member holding less than 1/10 wants to apply. Can he? What is your view? In fact, this slide is very important. You can take a photograph of it and keep it. Oh, I was expecting from Sriram, but I got it from Ms. Janvi. One member can apply. Beautiful. Because rightly pointed out Janvi ji and correct. 8 shareholders, 1/10 is 0.8. You can't have 0.8 of a human being. Which part of him will you leave out for 0.8? Feet, head. So 0.8 will be rounded off to 1. So one member can apply, right? Correct. The next one. The issued and paid up capital of MNC Limited is 5 crores, consisting of 5 lakh equity shares of rupees 100 each. No problem. The company has, the issued and paid up capital is 5 crores, consisting of 5 lakh equity shares of rupees 100 each. The company has 500 members. Okay. A petition was submitted before the tribunal signed by 80 members holding 10,000 equity shares of the company for the purpose of relief against operational mismanagement by the majority shareholders. Majority is operational mismanagement by the majority. Examining the provisions of the Companies Act 2013, decide whether the said petition is maintainable. So the subsequent withdrawal of it, let us see. Now let us look at maintainability. Can you tell me? I want you to answer. For the second one, the dark blue area. See, 5 crores, 1/10 will be 10% of the capital will be 50 lakhs. These people are holding only 10 lakhs. They are 80 members. Applying the provisions of section 241, not 241. Sriram, there is 244. Since you are mentioning section, I'm telling you. 241, 244. 1/10 of members can apply to the tribunal. Hence, 8 shareholders. 1/10 of. Okay, that is over. That is over, yes, Sriram. Thank you. That's a nice, well-argued answer. And that's again 244, right? Remember? 1/10 of 500 is 50. So, yes, maintainable. Thank you. That's a correct answer. Yes, as 1/10 of 500 members are 50, in the case is 80. Good. Subsequent withdrawal, you already know the answer. You know the case laws. Okay, Rajamundry Electric Corporation versus V. Nageshwar Rao. Not A. Nageshwar Rao, that is Akkineni Nageshwar Rao, one of the most famous Telugu actors. And I'm very careful, one of the, not the. Thank you, Kaushiki ji. You are right. Janvi, right. Beautiful. There are a lot of questions in this topic. If you go to question bank or whatever you're going to use, a lot of questions here and this part. So that's why I'm saying this is very important from exam point of view. See, I'll tell you what happens. When the number of questions is more in one area, generally the hypothesis may not be a theory, but generally, and I proved, I think it's a proven theory only, but I can't give it as a theory to you and say, yes, if the number of questions is, density is high, probability becomes high. I cannot say that, but definitely correlation is there. So it makes sense to know it. See, instead of wasting your time on some useless, low, small area where nobody will even bother to look and asking questions to faculty about it, you can know this well, thoroughly. So that in the exam hall, you don't say, hey, what was that 244, man? That Srikanth was also telling important. I never studied it. I was studying some small sections in the last end of the, and I was worrying whether that will come in the exam. Whereas this is come, and that fellow Srikanth also told it will come. Oh my God, why I didn't remember? There's no point in telling like that. At least know this well. Then you study every nook and corner of the institute material. That is your choice. Okay, that is your choice. Nobody can prevent you from doing it. But know this well and then go there. So, the issued, subscribed and paid up share capital of ABC Nidhi Limited is 10 lakhs consisting of 90,000 equity shares of 10 each, fully paid up, and 10,000 preference shares of 10 each, fully paid up. Out of the members of the company, 400 members holding 1 preference share each and 50 members holding 500 equity shares are paid. The company had 600. I think this is the same. Sorry, I think I'm reading the same question again. I'm sorry. I'm so sorry. I'm so sorry. A group of shareholders consisting of Sriram. Yeah, so 80 can apply. No, that is your point. The 50 is the limit, 80 is applying, so it is valid. A group of shareholders consisting of 25 members decides to file a petition before the company law board. See, in those days, it was company law board. Now it is NCLT. This is taken from an old question paper. So don't worry. If you don't like the word company law board, change it to NCLT. I will not change it. If you want, you mentally change it. So as you're reading it, you should read like this. A group of shareholders consisting of 25 members decides to file a petition before, and not a petition again. What is the word used here? Application. Got it? It is an application. But whereas in the good old days, 397 was a petition to the High Court, to the court. Whereas now it's an application to the tribunal. Okay. It's okay. to the company law board for relief against operation and mismanagement by the board of directors of fly-by-night operators. Hey, fly-by-night has a very bad meaning here. Fly-by-night means people will collect money from the public, maybe deposits or something. Then in the midnight, they will quietly run out of the city, take the last bus and run away. So those people are called fly-by-night people. But it could also be that this company is engaged in operating flights that operate in the night. I don't know. So then, whatever it is, a group of shareholders consisting of 25 members decides to file a petition before the company law board for relief against operation and mismanagement by the board of directors of fly-by-night. The company has a total of 300 members, and the group of 25 members holds 1/10 of the total paid-up share capital, accounting for 1/15 of the issued capital. Wow! The main grievance of the group is that due to mismanagement by the board of directors, the company is incurring losses, and the company has not declared any dividends, even when profits are available in the past years for declaration of dividend. Advise the group of shareholders regarding success of getting the petition admitted. Friends, this question is a two-part. I have removed one part. The first part is advise the group of shareholders regarding success of getting the petition admitted. Then, of course, whether their complaint is valid, we'll take it up later. Right now, is it maintainable? So, the company has a total of 300 members. So, 1/10 is 30. So, these guys are 25. So, neither 100 nor 1/10. So, one more chance is there. They should be at least 1/10 of the issued capital. They are 1/15. So, 15 is more than 10, no? Therefore, 1/15 is more than 1/10. Am I correct? Boss, 10 is more than, 15 is more than 10, no? Therefore, 1/15 is more than 1/10, no? How you can tell like this, yeah? Sorry, my usual crazy, jokes. Ignore it. Okay? Become serious chartered accountants. Don't cut jokes. Don't be funny. Don't enjoy humor. Don't laugh. That's easy. Okay? Be serious. Study hard. Okay? Become chartered accountant banao. And then paisa. And then what? And then what? Okay? I don't know. Ask yourself. I don't know about that. Enjoy every minute of your life. This is the mango season, no? This is the mango season. I'm sure almost whole of India, mango season. So think about it. How do you eat the mango? Take the mango and then you make a small hole and then suck it. Am I correct? I think you can already taste the mango. Suck the mango. Suck it fully till only the stone in the middle is left. That is how you have to enjoy life. Every moment. Okay? Enjoy life. There's no point in wasting your life. It's running out. So I was thinking like this when I was 18. That is why I became chartered accountant at 21, because I want to quickly start enjoying life and do away with my studies and start with my life. Okay. So as usual, unsolicited talks can be cut. In fact, I had one student putting a comment. Sir, do not waste our time giving all unnecessary information or sharing your life story. Please teach the subject for which you are paid. Like that he put. Wow, I thought, wonderful member for our institute. Okay. Anyway, I'm giving you time to give answer and then see whether. But again, I've given the answer here. So now I'm aware. No, sorry, I made a mistake. Fraction means 1/15 is less than 1/10. I understood. Therefore, these guys are holding less than 1/10 of the issued share capital also. So this petition cannot be admitted, as rightly pointed out by Kaushiki ji and also Janvi ji. So, but the only thing is, of course, this is a query part, but look at how Sriram answers every question with a lot of clarity and with a lot of detailing. Okay, that effort you take it. In the exam also, you'll be motivated to write. Okay. So now from the problem, it is clear that the group of members are not 100 and do not constitute 1/10 the total number of members, which is 30, and do not hold not less than 1/10. They're holding 1/15. Therefore, which is less than 1/10. Thanks to being educated by all of us, by you. In fact, in usual classes, when it asks this 1/10, 1/15, some students will stand up, sir, you don't know, sir, 1/10 is 1/15 is more less than 1/10, sir. Like that they will say. Oh, really? I'm sorry. I'm very weak in mathematics. So Thank you for correcting me like that, I would say. So, therefore, they are not, in fact, that is another problem. I am very weak in maths. But of course, I'm a Master of Science in Management Systems from the Birla Institute of Technology and Science. But quants was my toughest paper. I got just B minus. I scraped through because there B minus is if you don't get B minus, you are failed. So in quants, I got B minus and I scraped through quantitative. But then I learned with that B minus, I learned a lot. And I regretted not having given more attention to trigonometry and calculus when I was in school. But that's okay. But then I learned a little bit of calculus, which I found to be very interesting in application. Which later, when I come to security analysis and portfolio management, the math that I learned helped me a lot in becoming a better at valuation. Okay. So, therefore, they are not statutorily eligible to make an application to the tribunal for relief. Agreed. But remember, by virtue of section 244, tribunal may authorize any members to make the application. Don't avoid writing this. Even though they are not sufficient, the section has a loophole. 244 has a escape valve. You are going to advise them. So remember, when you are advising them, you cannot tell you can't apply like that. But they won't apply. So he said, it so happens that there's one way, boss, take your case and go to the tribunal. We'll prefer a petition initially for admission. Let us see. So it is beautiful, beautiful. Yeah, Sriram, I like it. I'm not trying to also, I'm appreciating you, definitely complimenting you. But I'm also, humbly, I don't know if others can see the query pad. Because one more thing, I'm not the only teacher here, Baba, please. In a class, everybody is to be involved and work. No class of mine will be a lecture mode. It will be interactive. People will answer. We will learn. Everything will happen. Okay. So that way, I'm learning a lot from Sriram on how presentation is possible. Okay. Good. See, issued capital is more than paid up, not necessarily. Issued and paid up may be one and the same also, but till the entire issued capital is subscribed and paid up, there would be a mismatch between the issued capital and the subscribed capital. But once the issued capital is fully subscribed and that subscribed capital is fully paid up, then everything would be the same. During that interregnum period, there would be a difference. In which case, as you rightly point out, issued capital will be more. Okay, issued capital will be more. Good point. Okay, you can make that assumption also. It is assumed that issued share capital and paid up share capital are equal. Only then 1 by 15, 1/10 issue will come up. Good point. Well taken. Okay. So, a group of shareholders of Badwill Machineries Limited filed an application before the Company Law Board, alleging various acts of fraud and mismanagement by Mr. Big Fish, the managing director or his associates. During the course of hearing before the CLB, the authorized representative of the said company contended that the alleged transactions had taken place several years ago, and the company has already removed the managing director who was responsible for such transactions, right? And hence, there is no case before the CLB to interfere in the working of the company. Now, against the submissions, the applicant submitted that although the fraudulent transactions were done in the past and the MD has been removed, company is still controlled by persons who are MD. Now, will this contention be? See, earlier, past acts could not be complained of. But now the law has changed, have been conducted. Past is also included. So the same question, if asked now, your answer would be the past acts could also be considered. And more so when they are showing that the new persons who are appointed are in league with the managing director and are working as his henchmen. See, this is what henchman means. People who will obey him. Yes, boss. No, boss. Everything, you are right, boss, like that. So they are people like that. Now do you understand? Though Mr. Big Fish is not a director, it's not an MD, this company, that board of directors is accustomed to act in accordance with the instructions of Mr. Big Fish. So that way he will be deemed to be a director. Right? So we now come to the powers of the tribunal, which are very interesting area. Powers of the tribunal. There are some ajar powers are there, but all of this you should try to remember. Some are important, some are not important. Now, see, again, I'm going to cry a little bit. I'm going to cry because combining oppression and mismanagement was a foolish idea, because conceptually they are two different things. The earlier law 397, 398, 399, earlier law was a beautiful law which was taken from the British law. British are not fools, yeah. They knew what they were talking about. So the sections were clearly worded. 397, sorry, my mobile was 397 oppression. The tribunal had to establish that the operation was such a nature that it is better to wind up the company. Right. And past acts were not allowed. Now they are combining the two. Therefore, the single 242 has to give relief for all. Can do. But that test of winding up was not there for mismanagement, only for oppression. Test of, what shall I say, mismanagement, test of winding up was not necessary for mismanagement, because in mismanagement, what you're showing, there is going to be a change in the management, because of which there is likely that the affairs of the company will be conducted in the manner prejudicial to the interest of the company or of the members. That's all. Of the members complaining. That's all. So there you need not show that it is of such a nature that the company should be owned up. Whereas oppression is different. One member is oppressing other. There's a deadlock, or there's so much thing that it won't work. So better to wind up so that some members can buy up or wind up the company. All that is there only for oppression. No need for mismanagement. But they have combined the two in 241. 1A and B. 1B. Now they are saying on any application made under section 241 wholesale. Earlier also the powers were common. The powers under 402 were common. But 397 was valid, 398 was valid. And the test of winding up was there only for oppression, not for mismanagement. For information. See, whole thing has become foolish. But with all this, tribunal is still taking cognizance and going on. That is why this may sound a little confusing, but that is because of the combination, combining these two in one. That is also not wrong. You want to make the number of sections less, chalo, no problem. 241 1A, 241 1B, instead of 397, 398, no problem. But in 1A, you should have included the test of winding up. Whether the oppression is of such a degree that it is better to wind up the company. But to wind up the company would unfairly prejudice the applicants themselves. Okay. Anyway, so now they feel that it should the test of winding up is applicable in both the cases. Agreed. So now let's understand the section. On any application under section 241, the tribunal may be of the opinion. Okay. So they go through all the documents, facts. They hear both the parties, of course, completely. Like what's happening here, big fish matter. Finally, they come to the conclusion. The company's affairs have been or are being conducted in a manner prejudicial to public interest, prejudicial or oppressive to members, prejudicial to the interest of the company. So, in the case of oppression, past. In the case of oppression, are being. In the case of mismanagement, it is likely. Okay, so here where is that likely that? See here, mismanagement, what the opinion they should form. See here. It is likely that the affairs of the company will be conducted in a manner that is not covered in 242 when they come to relief. Okay. Are you able to understand? This is what happens when combination, but it's okay. We will forgive them. Okay. Of their lapses. May God forgive them for their lapses. Wow. We are not competent to forgive them for their lapses. May God forgive them for their drafting lapses and give them better sense when they try to redraft the law again. Okay. The good law, don't damage it. That's what I'm saying. It's a good law. Just take it as it is. Okay, the English is definitely above your capabilities. So please do not try to. You means not you. I'm talking to the MCA people. So definitely the basic knowledge of English that you have is not sufficient to understand what the Englishman has written. That being so, please do not meddle with it. Okay. Anyway, having meddle, they have the, see, after all, they are the government. They have every right to meddle. They can put me in jail tomorrow for talking like this. But then, as students and teacher, we have a pure relationship. I'm telling you, see, this is the problem. I'm not trying to find fault with the law, and some of you may rush to defend the MCA also. I've seen so many people, when I criticize the drafting of the Companies Act, I've got a lot of students who will try to justify the law. They will become the uncles and parental figures for the MCA. No, don't blame my child. Such a good boy, he will be drafting correctly. You rascal Srikanth, you are only talking like this. Like that they will say. So anyway, let us see. That is what I meant. What is meant? Let us see. Correct. Sir, is there any separate concept called up capital in 2039? Because no law, there is capital. Called up capital is there, na? It is there, very much there in the Act. I've seen it somewhere in the share capital topic. It is there. Anyway, conceptually, it is there, na? Once your subscribed capital is not fully called up, the uncalled portion is there. We are talking about uncalled portion and all we talk about. And called up capital, yes, called up is there. Called up, usually called up will become automatically paid up. The gap, the duration for called up will be very less. It may not survive a balance sheet date. It may not survive a balance sheet date unless it is happening around end of March and it's getting, closed again. So that is the point. Okay. So called up. Okay. Called up capital, okay. If you feel that there is no separate portion, you can simply say subscribed capital, then paid up capital. There will be a gap between that. Now that gap is nothing but called up but not paid up, right? To the extent that there is a subscribed capital, but then you should know whether it is called up, right? There could be subscribed capital, then there could be paid up capital. For example, 10 rupees subscribed, 5 rupees paid up. Whether the remaining 5 rupees is called up or not, how will I know? So if suppose it is called up, at that time it will become called up capital. Am I correct? So there will be a very short time. Immediately it will become paid up. So which is why you will rarely find in balance sheets separate called up line, called up capital like that. But it is there. Concept is there. Very much it is there. There is no separate section and all for called up capital. But uncalled capital is there. To the extent that the company has issued capital and then it is subscribed capital but not paid up. To that extent, it is called uncalled capital. Once it is called up, it is called up capital. See, even it may not be there in the Companies Act, yeah. But conceptually, there is a need for such an account to be maintained by us in accounting. When you make a call, what you will do? First call account, you will credit, na. Am I correct? You will debit share first call account, credit share capital, na. That share first call amount where we will show. So to that extent, we will show, you can't show it as paid up capital, right? So that portion alone will come as called up only. So to that extent, it is called up but not paid up, right? Finally, paid up will be there, which will be lower than this figure. Call money on shares is not paid by 5 members out of a total of 90 members. So we will not include 5 members. Yes, madam. Because one of the conditions is call money should be, calls in arrears should be, there should not be any calls in arrears. You will not include. Okay. Now, so now comes the beautiful point. The tribunal first is satisfied. The affairs of the company have been or are being conducted in a manner prejudicial to public interest, oppressive, prejudicial interest of the company. Then, and that to wind up the company would unfairly prejudice such member or members, but that otherwise the facts would justify the making of a winding up order on the ground that it was just and equitable that the company should be wound up. So how to understand this? The tribunal analyzes the facts, accepts that the affairs are being conducted in this manner badly, but it's so badly conducted, Baba, why even keep this company alive? The facts would justify that better to wind up the company on the grounds that it is just and equitable so to do. When you come to winding up, it's a topic which will be taught by another faculty. There you will find there are several grounds under which tribunal can wind up a company. Compulsory winding up, it is called. the last ground is just an equitable. On the grounds that it is just an equitable. That is an open general clause, which should not be related to any of the earlier clauses. Any ground can come under that. So long as the tribunal is satisfied that there is no point in keeping the company alive. But they will have to form this opinion. See how it is. They go to the brink. They go to the end. They say, better to kill this fellow. And then say, no, we will save you. Come. So, but because think about it. If you wind up the company, who would be affected? The complainants only be affected. Because the other party has cheated them. So if you wind up, you will actually be helping that guy. Therefore, winding up is not the solution. So they'll say, we will now pass orders to bring to an end the matters complained of. So that is how this 242 starts. There are so many reliefs that they can give. Before we go there, let me share with you two examples. One is called the case law of Ibrahimi versus Nasser. Ibrahimi versus Nasser. Okay. Actually, it is Ibrahimi versus Westbourne Art Galleries Limited, the company. Ibrahimi versus Westbourne Art Galleries Limited, very famous British edition. It's a nice case. See what happens. There are two people, Ibrahimi and Nasser. They are running an art gallery or they are art dealers. So they deal in, antiques, carpets, vases from Middle East, paintings. So they deal. They have a showroom in Westbourne where they display it. Okay, Ibrahimi goes and he sells it in the shop. Nasser goes and buys it from everybody, brings it Ibrahimi. So they have a good friendship. 50-50. Westbourne Art Gallery, 50% Ibrahimi, 50% Nasser. Friendship, wonderful relationship. Company does exceedingly well. One fine morning, Nasser decides that he will bring his son, Nasser's son, NS, into the business. They are both happy. I'm sure they had a nice drink over it in the local pub and then said, that's great. Oh, sorry, they are Islamic gentlemen, so they may not have had alcoholic beverage, but I'm sure they celebrated it in some way and then said, hey, come on, Nasser, bring your son in. So Nasser's son comes in. So Ibrahimi gives 5%, Nasser gives 5%. See how the tables are changed now. Nasser 50, Ibrahimi 50, Nasser's son comes in, Nasser gives 5, he will become 45. Ibrahimi, anything possible, but they're not. So he goes to the court, Chancery Division, court, he goes there and he says, give me relief for oppression. Do something about it. So remember, Ibrahimi versus Westbourne Art Gallery case was not a winding up case. But you may come across it winding up. If the faculty remembers this case law, she or he may tell you about it. But basically, this case law will come in winding up. But it began as oppression case. Ibrahimi is not saying wind up the company. Ibrahimi is saying the oppression is there. Please help me. The court goes through the case and finds, Mr. Ibrahimi, what is this? If you are so badly treated by these two fellows, no, sir, he is my friend like that. The court finally says, no, Ibrahimi, we will wind up the company. On the grounds that it is just inequitable to do so. Don't worry, so much money is there in the company. If the assets are sold, you will get your share. Take it and go, man. Don't waste your time. So there, in Ibrahimi versus Westbourne Art Gallery, the court converted this oppression application into winding up petition and said, you might have come here, but we feel that the facts would justify the making of winding up order, and they passed the order. But in this section, they say the tribunal should go right up to that point and then say, hey, to wind up the company would unfairly prejudice the members. See, I'll give you another example. And here you'll also see majority being oppressed by the minority. Majority being oppressed by the minority. And I told you, I was also somewhat related to this case. I won't tell you the name of the company, but I will tell you one thing. This company was the first company to receive the Director General of Civil Aviation. When the liberalization started, the Director General of Civil Aviation started giving out licenses to private parties for running private airlines. This was in the 90s. Please don't immediately rush out with names, like what is that, SpiceJet, Indigo and all. They came day before yesterday. I'm talking about 90s, 92, if I remember, 91, 92. Liberalization just started. DGCA wants to, I think the minister calls, the then minister calls Mr. A and tells, take the license, go, start your own airline. This was the first private airline, not Tata. See, Tata was before independence. I am telling after liberalization. The first company to be formed under the new licenses. When the liberalization started and the civil aviation was opened up for private investment, the first company to be formed, I only formed it. Okay, first company to be formed and first company to come into operations also. After that, only other companies started coming. Okay, so even though there is a record, this company is the first company to fly, private airline to fly after liberalization. Listen to me, after liberalization. Tata was before, pre-independence, Tata was there. Then on Mrs. Indira Gandhi converted socialism and public, nationalization, took it away. Then subsequently, Narasimha Rao comes, he says privatization, liberalization, privatization. At that time, the space was opened up. First licenses to this company. Everything would have been great because Kaushiki, just listen to the story. Your question will be answered. Your question will be answered. Okay, so listen to the story. So let us say that Mr. X got the license. He formed the company. He had some money or whatever. He bought something, but he needed more money. So he goes abroad and he talks to people in the Middle East and all, and he says, hey, this is how it is. So they're also very happy. They start giving him money. One Mr. TG, a very wealthy man in Philadelphia, he says, I will invest in your company. So already the investment made by Mr. X is, see, you are giving names. Don't give me names. Waste my time. You decide. Why names? Yeah, story is more important. Facts are more important. Okay? East West Airlines. No. I know you'll get it wrong. Okay. So now coming to the point. Don't worry about the name. Okay? Come to the point. The point is, Mr. X has invested, say, in those days, 1 crore. Mr. TG bought 3 crore. Some more shareholders are there, altogether about 6 crores in that business. TG 3 crores. X 1 crore. Minority controlling the company. Okay. In fact, the company's timing was impeccable. The Indian Airlines was the only company running at that time domestically, and the pilots had gone on strike. Can you imagine? And this company got the Bombay route. Okay. Kochi, Chennai, Chennai, Bombay. Fantastic route. And Bombay, Chennai, Bombay, great, because everybody wants to go to Bombay and by flight. So when this company started and they put up their ticket counters, sometimes people used to come throw cash into the counter and take the ticket and run. Okay. Luckily, no standing allowed in flight. Otherwise, you would have got standing also, they're willing to go so long as they reach Bombay. So what I'm trying to tell you is, company did well, but mismanaged like anything. The cash was put in gunny sacks and taken to the MD's house, and all sorts of nonsense was done. And so obviously TG was not happy. So TG came and said, I want to know what's happening because you got my money. So who is he? He is a 3 crore investor as against a 1 crore investor. So here was a classic example of the tail wagging the dog. Now, finally TG comes and they have a big fight. Oh, that was all nice to watch. I was having pavilion seat to watch it. So not gallery. I was very much in the pavilion seats and watching the fight. And it was nice when it lasted. And I was pretty young at that time. So all this was pretty nice to watch. And of course, later on that matter goes to the CLB. TG files the petition against the company and the other respondents. Finally, the tribunal goes to it. CLB goes to it and says, see, now they say, hey, oppression is there, Baba. Clear case. But we can wind up the company. But if we wind up the company, what will happen? Already money has been siphoned. So who will be the loser? TG, because his entire 3 crore is gone. How can he recover it? So if you wind up the company, there is nothing in that company. Everything is out. The money has been sucked out. Shell. So if you wind up the company, who will be affected? The petitioner, member of members who are complaining. They will wind up the company. But if you wind up the company, the applicants will be the losers because their money will go. Therefore, with a view to bringing to an end the matters complained of. So what is the matter? The affairs of the company are being made. So some of the action should be taken to recover the money, bring it back into the company. Then you can wind up. That is different. But at this stage, no. Okay, the relief should be given. So 242 gives wide powers to the tribunal to bring relief. First power, the regulation of conduct of affairs of the company in future. Regulation of conduct of affairs of the company in future. The tribunal may, on the application of any party to the proceeding, make any interim order which it thinks fit for regulating the conduct of the company's affair upon such terms and conditions as appear to it from time to be justicable. Agreed. So in this case, TG applied and said, look here, he was running it badly. Allow me to run it. Anyway, the flights are there, wet leases are there. I will pay some more money, pump in money. I will run it. I will make money. I will try to recover my capital in some way. Please allow me. Then I will pay him also. Later on, let him come to the table. I will purchase his shares, whatever. But there were certain other misdemeanors. I can't tell you that. Okay, that I can't tell you. So that case can go on, but whatever it is, we'll have a settlement for it. Okay. So the tribunal said, hey, that sounds nice. Yeah, we'll do that. So what they said, new board will be appointed with TG as the chairman and managing director. They also appointed two ex-Air Force, civil aviation, retired pilots and retired people from the Indian Air India, the government ministry, to join the board and guide the company. So that professionally the company managed. But that didn't work because TG himself was busy. See, he had international business, so he couldn't concentrate on this business. And they couldn't get a good guy to take it up in this crucial moment and run it. So finally, that whole thing got messed up. And at one stage, they wanted audited accounts and they came to me and accounts were nothing, badly maintained. Nothing was there. So I signed that balance sheet, but qualified 13 points in Macaro. In those days, it was called Mavocaro, manufacturing and other companies. Auditors report order in those days. And I qualified. 13 qualifications, Macaro. Including, there is 227 1A in those days. Still there in your act. Where cash is, where share capital has been allotted for shares or consideration other than cash, whether the transaction is correctly represented. I gave a qualification. Said, no, it is not done like that. So what I'm trying to tell you is, of course, this made me a huge enemy of Mr. X, but that's okay. So the point I'm trying to make is regulation of conduct of affairs of the company in future. Very exciting, no? Operation and mismanagement. You have to be very emotionally stable. Otherwise, you'll be gone. When these two huge, big shots, they're fighting with each other. If you're caught in the middle, your head will go. They bash you first, and then they'll bash each other. So better you should stay away. You should know how to defend yourself. Okay, protect yourself. Otherwise, this is a very dangerous game. But it's very exciting. In fact, once TG took over, East West Airlines had come. All the big guys had come. Damania had come. East West had come. NEPC had come. So that monopoly that this man was enjoying was there. Short-lived monopoly for about 9 months was gone. And then, of course, you have to run the business efficiently, and you won't really make money there. Like that. Of course, there are bigger stories in the civil DGCA, the civil aviation space. There are bigger stories there. I can't tell you everything there. So that's a bigger story. Okay. Anyway, that never worked out. And this company is now there on the rolls with this one great distinction. What is that? First company to be registered and to operate as a private airline. First company. That credit will go to this company always. Okay. Chalo. Now, purchase of shares by members or company. So the next stage. So the TG, see, after all, TG is affected. Mr. X wants to run the company. Then what he should say, okay, I will buy your shares. So purchased by any members. But suppose the members are not willing to buy, then the company itself can purchase its own shares. Remember, when a company purchases its own shares, can a company purchase its own shares? You studied it in intermediate. There is no prohibition, What they say, a company may purchase its own shares if the consequent reduction in share capital is done. So that reduction in share capital, who will confirm? The tribunal. And who is hearing the case? The tribunal itself. So separate application need not be made. When the company purchases its own shares, in the case of purchase by the company, the consequent reduction in share capital will also be approved or confirmed by the tribunal. No need for special resolution, blah, blah. Straight away, the tribunal itself will say, We direct the company to purchase the shares of these people and give them the money, valuation done. That will all be monitored. Registered value will give a valuation. What is the money you give? And we also, by this order or by another order, they will confirm the reduction and say reduction of capital approved. So that's all. Sir, Jigar Kadia, don't confuse buyback with reduction. Buyback alag hai. Okay, this is by purchase. Anytime you can purchase your own shares, provided the consequent reduction of capital is confirmed by the tribunal. Okay, that rider you have to add. Then you can say, yes, company can. Thank you for that involvement and sudden comment, Mr. Jigar Kadia, Jigarji. Okay, time now is about 7:35. Let's have a small break before we go on to further investigation into this topic. Sir, break, sir. So, back from our break, and nice to hear from Mr. Jigar, who says that he's already heard my recorded mode. Please get actively involved, sir. Nice to have you here, Jigar. You're from which part of India? Just curiosity, nothing more. If I start asking each one of you, that will take a lot of time. So not a problem, but still, I'm a little curious. No problem. So, Madam, it is not Jet Airways, it is not Air Zahara, it is not, this is even more older. This is the first, okay, first guy. So, Jet Airways came now, the second phase. See, there were one wave. In that wave, you had Damania, NEPC, East West. That way, Janvi was almost there with East West. But this guy is older than East West. All of them came in one shot. This guy, East West, NEPC, Damania. They came in one shot. Then they all got destroyed. Then second round was your Jet Airways, Air Sahara, Air Deccan. Deccan Air came much later. And of course, the one and only Malia came. Okay. So all that with this Kingfisher Airlines. There was a big Paramount came. There was a second round. Oh, wow. Welcome from Gujarat. Great, sir. Gujarat. Nice. Great people have come from Gujarat. Gandhiji, Modi ji, Sardar Vallabhbhai Patel. So we have now Jigar Kadia also. Welcome, sir. Welcome. So, moving on. So, since they are going to permit the purchase by a company of its own shares, they also have the power to confirm the consequent reduction. Okay, Kaushiki, but that way, Kaushiki, I knew you are either from Haryana or from Punjab. That much I know. Okay, it was only a question of whether you are in Haryana or Punjab. That's all. I know that much I could make out from the bold way in which you are giving the replies and the confidence that you are demonstrating. I know that you are a lady from Punjab, but I thought Punjab, but now you are saying you are Haryana, but that's okay, not very far. Okay, so in Chandigarh, if you go this side, little distance Haryana, that side, little distance Punjab. So beautiful. Moving on, they can also place restrictions on the transfer or allotment of the shares of the company. Restriction on the transfer or allotment of the shares of the company. Because one of the complaints by the complainant is there is going to be a change in the management control of the company, by virtue of which there will be change in the ownership of shares. So if you tell very clearly these shares are going to be transferred to the wrong people, then immediately the tribunal will pass an order saying these shares will not be transferred till we give permission. So like that. So they can place restrictions. These are good power. Termination of agreements with the MD. See, one of the complaints could be that the MD is taking huge salary, which is not justified. Maybe violative of section also. But then private limited company, section the limits don't apply. But it may be unreasonable. MD is taking huge salary, unjustified. In which case they can say termination. That's it. You can't, the agreement is out. Setting aside whatever is the duty of the company need not be performed. Modification of any agreement. That is, they may say, look here, MD is entitled to salary, but not 1 crore per 2 crores per month, per annum. No way. They are restricting it to 60 lakhs. 5 lakhs per month you take it, not more than that. Okay. So they can do that. So modification. However, arrived at between the company and the MD, any other director or manager, upon such terms and conditions as may in the opinion of the tribunal be just and equitable. Which is why I said, the guy has got an agreement by which he is taking 20 lakhs salary per month. Company profit is not sufficient. He is siphoning the funds. So, in order to, or maybe almost 90% of the profit is taking out as salary. Okay. Whereas some reserve should be there. The company should grow in the long run, right? Therefore, they will say, look here, you have put 2.5 crores per annum. We are not saying you are not entitled, you are doing a hard job. 2.4 no. We can allow you 5 lakhs, take it. So just and equitable. So whatever it is, they can do. Modification is possible. Also, termination, setting aside or modification of agreement between company and any person Other than those referred to in E means other than MD, any other director or manager. Any other director includes part-time director also, non-executive director also. Other than directors, manager, MD, director, manager, any person. For example, a related party. See, there may be a related party with whom relationship is there, which is not fair. Maybe the agreement approval, etc., they have done, but the transaction itself is fraudulent. Maybe the guy is not supplying goods at all and taking money. That's siphoning. So maybe the inventory is being modified and shown as supplied, but not supplied. Something like that. See, that way, once you get into internal audit and forensic audit, you'll find so many ways of fraud are there. Okay, and so on and so forth. For example, in most industries, there will be a wastage of certain amount allowed. So say, for example, 5% or 3% will be, 2 to 5% will be allowed as wastage. Now, what they will do, they will be doing genuine business, huge business. But the MD, what he will do, they will allowances too. So they will claim 8% wastage. So what they will do, 2% is the actual wastage. But the balance 5%, they will show as raw material purchase from bogus purchase from these people. Pay them the cash, I think, TDS, everything, whatever. Okay, GST, everything will be done. And then that fellow will get the money, but he won't supply. Instead, records will be shown as if supply came. Obviously, in the long run, what will happen? Total raw material consumption will be there, output will be there. That 5% will get adjusted in this wastage. And that 5% would be huge amount per annum. For minimum, say, 50 crore, 60 crore, like that. For a large company, this is one way of siphoning. I'm giving an example. I'm not saying it is happening. But yes, it has happened. I have seen. And you might think, sir, what is 60 crore? But 60 crore is a big amount. Yeah. Why? 20 crore is a big amount. Yeah. It depends now. Only since you are used to that whole big scams, for you, 60 crore is not seen as a big amount. You see the number, you will then understand it is worth making this type of a fraud. Am I correct? And it has happened. Well, fraudulent fellow comes in, he gets an idea how to swindle money, like this they do. And this can happen in professionally managed company with independent director. This will get discovered when internal audit will come out, or internal audit will be pointed out, but they will again see it is very difficult to prove it unless somewhere there is a slip up and some document is out. Then, or you will be able to see the actual physical stock taking. Even then you can get out. Yeah, I'll tell you, it's very easy to get out. This is very difficult this is one fraud that needs huge difficulty to prove. I have proved in one case, but it took a lot of time. And I have to control everything and do it. But I showed in one example, look here, this supply never came. That's all. It's like that Jenga, you pull out one brick, the whole thing comes down. That one brick, if you pull out, the whole structure will come down. Okay? That means your ability to audit should be very powerful, and you should be having ability to withstand emotionally, because you'll be pushed to the limit and they will try to threaten you and all. Even in many bank audits, I have had this inducements. They'll say, Shrikant, you are a young man at that time, not I was young. Okay. Now Buddha ho gaya. At that time I was young, 28 years old man. He said, come, allow us to do this. Don't qualify. Certify it as a good asset, or don't push it to doubtful or loss. Keep it in substandard only, which is okay. Tell me what you want. I will do it. Here's a blank sanction letter. Take it. Bring any fellow donkey, any donkey you bring, I will give the loan. You take 2% from that fellow. Like that. I'm sharing this with you to say, these are the Dharma Shankata. It is in those circumstances that your ethics would be tested. And it is in those circumstances that you should be able to withstand, stand up, look at them in the eye, smile and say, no, sorry, I'm not such a cheap person. I'm a member of the Institute of Chartered Accountants of India. You cannot purchase me. You cannot pay me. You cannot buy me. Okay. So this is remember, when you walk, the Institute is walking with you. Whenever you do something, in a way, the Institute is getting affected. Any negativity, the Institute is getting affected. So remember, when you walk, behind you, the Institute is walking. So don't do anything that tomorrow will affect us, all of us. Okay, just think like this. Then automatically you stand erect, look straight into the eyes of the person, smile, and politely refuse to do whatever is being told to do. Okay, so here's a case where There's an agreement between some person. Obviously, like I said, now some fraud is there. Then they will say, hey, cancel this agreement straight away. But be careful. Here you are dealing with a person other than the director. Therefore, before terminating that agreement, setting aside or modifying it, notice should be given. And the consent should be taken. Okay, but consent need not be taken for termination or setting aside. But for modification, his consent should be taken. Please understand. Termination, setting aside, no need for consent. Yeah, you are out. But notice will be given. Maybe an opportunity given for him to show why it should not be cancelled. But modification is different, where you are not totally relieving him. You are saying he has to supply the goods, but at this price. That he may not agree. I don't want. So that his consent is also required. Good. This is a little difficult to understand. Stay with me. Stay with me. Yes, I need to do one small thing. Application under this section, which would, if made or done by or against an individual, be deemed in his insolvency to be a fraudulent preference. See, the MD of the company or the directors are aware that the company is insolvent. So what they do, instead of going for winding up, which is the correct method, they quietly take some assets of the company because maybe they have also lent money to the company. They have also lent money to the company, right? And instead of going for winding up, they transfer these assets to themselves in settlement of their debts. So they close their loan, take the asset. Then nothing in the company now. Are you able to understand? Suppose an individual does it in anticipation of insolvency. See, there is an individual who knows that even if all his assets are sold, they are not sufficient to pay his liabilities. But he has some assets. So he has some creditors who are known to him, or so he calls them and says, I will give you this asset, transfer it to you. You adjust it against your dues. Give me also some money, I'll run away. The rest of the creditors and other people can go to hell. Now, in those cases, if it is done within 3 months before the date of the insolvency petition, that transfer is not valid. Any transfer of an asset done by a person within 3 months before the insolvency petition is called fraudulent preference and is set aside. It is not valid. Same way, the company cannot do it on its own. Acting through the board, if the company has made any transfer, delivery of goods, payment, etc., within 3 months before the date of application under this 241, section 241, then if it had been done by a person, it will be in its insolvency, it will be treated as fraudulent. So in the case of the company also, it will be treated as fraudulent preference, right? So that agreement or the transfer or the delivery of goods payment would be set aside. That's all. Of course, the third party may be affected, but that's sorry. He should have made enough diligent inquiries. Removal of the managing director, manager, or any other directors. Remember, 242, this is one of the grounds of removal by tribunal. When a person is removed by the tribunal, he is disqualified. Also, he cannot be reappointed. Remember? Recovery of undue gains from managerial personnel. Here, beyond MD, KMPs are also covered here. Key managerial personnel. So any undue gains made by any MD manager during the period of this appointment as such, and the manner of utilization of the recovery, including transfer to the Investor Education Protection Fund or repayment to identify victims. So go back to our TG example. TG's money was siphoned out by Mr. X. So now, if earlier this section was not there, earlier this power was not there. So, but now it is there. They can actually direct him, Mr. X, to compensate TG for his loss to the extent of the siphoning out. Also, if any fraud has been committed by that person, which will affect in a listed company, all the investors, then the amount can be transferred to the IEPF so that any person who claims to be a victim can claim. Okay. All this is, very good for the shareholders and affected parties. The manner in which the managing director or manager of the company may be appointed subsequent to an order removing the existing managing director or manager. So you remove the head, but you have to replace another head now. So how that will be done? They can give directions. Remember, tribunal cannot appoint. Tribunal cannot appoint. They will only direct the central government to appoint. Please understand, tribunal is a judiciary. They cannot do all this. They will only have to give directions to the executive. The executive only will do it. That's very important for you to understand. Okay, minister cannot do anything. He will only give an order, GO. And once that is given, the executive will let it. Minister cannot get into the execution. Right? The secretary cannot interfere with the decision. Of course, he may influence, but final decision is minister. Minister has signed the note. Then only secretary can sign the order. Otherwise, secretary cannot sign the order. Okay? So he put up a note justifying or recommending or not recommending. Finally, minister take the order. Okay? So, and sometimes they'll put not approved. Then later on, when certain things are correctly done, note approved. And note approved, and that's it. It will be approved. Okay. So first it will be not approved, it will come back. Then when all the necessary activities have been completed, note approved, it will go back. And then GO will go. Okay. So whatever it is, the tribunal will give an order to that central government on how it's to be done. This is appointment of such number of persons as directors who may be required by the tribunal to report to the tribunal on such matters. See, if you remember in my example of TG and X, what I told, the TG was asked to run the company. Now, at that time, the tribunal appointed the nominee directors, who were retired Air Force people, who knew civil aviation well, understood the activities. So they were appointed as directors by the CLB to monitor and report. They can also impose cost, meaning imposition of costs as may be deemed fit by the tribunal. Because after all, the complainants have spent money for filing all this, and who's the party at fault? The other guy. So you pay for everything, yeah. Okay. So you remember in an Indian marriage, who pays for everything? At least in South India, in my community, only the bride's father pays everything. Okay, all the costs are borne by the bride's father in, at least in my part of the country. Okay, so which means, of course, I'm just joking. Okay, so just joking. Don't take me otherwise, because I don't know how it happens in Punjab, but here it is a bride side who have to spend everything from Vandal to final dinner. Everything we have to spend there. Finally, the groom side, they'll give one dinner as a token. Please come and enjoy one dinner. There is an opposite side dinner. One dinner will be there. One dinner or lunch will be there. That's it. That's the only hospitality we'll get. This father of daughter in India is, it is part of your duty as a father of daughter. Of course, my daughter is happily married and I willingly performed everything in a grand way. See, this is also a pride for fathers of daughters in India. To perform the marriage in a whatever suitable way we want to do it is also there. I mean, these are all culture, Indian culture. You see, recently I was traveling in Japan in April, and the Japanese are maintaining their culture. You see, though, if you see, in the office they'll be westernized, but once they go home, back to the yukata and back to they kneel down on the floor and eat, and they bow down. They maintain the culture. There are two, the Japanese two. One guy, the Japanese at home, traditional Japan. I've seen them in the temples and all, like they come in a very traditional way. In the office, very serious, westernized. Here, completely traditional. So somehow they're able to maintain these two as a country. Good. So imposition of costs as may be deemed fit by the tribunal. Any other matter for which, in the opinion of the tribunal, it is just and equitable that provision should be made. Any other matter, something left out, so I'll get it and put it under M. That's all. This is called an omnibus clause, or we can say, forget that. This is actually a residuary clause. It's called the residuary or residual clause, where if it is not covered anywhere in the last few, any other matter will be covered here. This is called a residual clause. This is to ensure that if something new comes up, it's not covered in up to N. It's quite lengthy. In those days, you didn't have so many powers. They had only about 6 or 7 powers. Okay. A certified copy of the order of under section 242 shall be filed by the company with the registrar within 30 days. Any order of tribunal received by the company, it is the duty of the company to file within 30 days to the registrar. Also, where an order of tribunal under 242(1) makes any alteration in the memorandum, then, notwithstanding any other provision of this act, the company shall not have power, except to the extent, if any, permitted in the order, to make, without the leave of the tribunal, any alteration which is inconsistent with the order, either in the memorandum or in the articles. So, if the tribunal has told, you amend your articles so that the powers of the MD are restricted, you have to amend it. Thereafter, you cannot alter it in a manner that is inconsistent with the order. Okay. If a company contravenes this provision, the company shall be punishable with fine up to 1 lakh and up to 25 lakhs, minimum 1 to 25. And the officer will be punishable with fine 25,000 up to 1 lakh. Alterations made by the order in the memorandum shall have the same effect as if they had been duly made by the company. See, tribunal has been given extraordinary powers under this section. Extraordinary powers. A certified copy of every order altering or giving leave to alter a company's memorandum or article shall within 30 days be filed by the company with the registrar, who shall register the same. Because the registrar will make it a public document, so that anybody is viewing the documents will know that the memorandum and articles have been altered by the tribunal. Okay. In case any agreement is terminated or modified, see, we remember there is a termination or setting aside of or modification, then such order shall not give rise to any claims against the company by any person for damages. So he cannot say, I'm affected by this, pay me damages. No. Or for compensation for loss of office. So where the MD is removed under 242, where the MD is terminated under 242, terminated means not killed. That is a different termination. Terminated from office, he cannot claim compensation. Okay. No managing, you remember, this is also a ground for disqualification. Where a managing director, or manager is terminated under 242, he shall not be appointed as managing director or director of the company. See, he cannot be appointed in the company. Also, where there's an order of conviction by the tribunal, it's also a disqualification generally in all companies. So, but definitely he cannot be reappointed in the company. So the disqualification is for a period of 5 years. Okay. After that, he can be appointed. Or before that, if you want to appoint him, you go to the tribunal, get leave, show that he is not such a bad man anymore. He has become a good man, and you can appoint him. So any person who is declared not a fit and proper person under section 242, 2A, shall not hold the office of director or any other officer connected with the conduct of management of any company for a period of 5 years. So, where you have been declared as, a person has been declared as not a fit and proper person, he shall not be qualified. He will be disqualified to be appointed as director or any other office connected with the conduct and management affairs of any company. But the central government may permit them with the leave of the tribunal before the expiry of the said period. Idea why they give this escape valve, because there may be somebody who genuinely got caught and he was not intentional, a victim of the whole circumstance. Later on, he can come and show, sir, at that time I was under the influence of those criminals. I did not know what to do. I was forced. They threatened to kill my family. I didn't know what to do. Then I obliged, I signed. I regret it. Please, now I need to survive. Kindly allow me to be appointed again. Okay, so they may appoint. Where there is any contravention, okay, then every other director of the company who is knowingly a party shall be punishable. Other than this guy, if knowingly you permit him to act as MD or manager, then the other directors will be punishable with a fine up to 5 lakhs, because knowingly they have allowed him to act now. Now, we are going to go into another very new provision, which is introduced for the first time through the Companies Act. Section 245 deals with class action. Meaning, See, this is in addition to 241. 241 is available. Where any members want to complain, they can go. But suppose a class of people feel that the company's affairs are not conducted properly, or they have lost money, they can approach the tribunal under 245. The word the company is insisted means he cannot be the capacity of director in that company. But can he act as such director or holding company as well? Yes. In this case, I have stressed the word the because this disqualification for 5 years is only for the company. He can be appointed in holding, subsidiary, associate, etc. To answer your question, Sriram. But remember, this is where he is being terminated under 242. But where he is declared to be not a fit and proper person, that's a disqualification for any company. Please note, where he is terminated under 242, only the company. But where he is declared to be not a fit and proper person, then disqualification for 5 years, any company. There's holding, subsidiary, associate, any company. I hope you make the distinction between the two. Got it? Then I will give you your answer, yes. For in this section, the company. Okay. Class action. Here again, there is a requisite number of members. Not less than 100 members of the company or not less than 5% of the total number. There we said 1/10. Here 1/5 is enough. Okay. Which is more, yeah. 5%. That means 1/20th of the total number of members. 5% of the total number of its members, whichever is less. Or members holding not less than 5% of the issued share capital of an unlisted company. Why I said issued capital, nobody asked me. Nobody thought why issued capital. Take our own example of TG and X. You know what happened? TG was holding actually 3 crore. But shares had been allotted only for 50 lakhs. Remaining amount almost 3 crores, nearing 3 crores, shares have not been allotted. He has made an application. He has applied. He has given the check. Check has been cleared. But shares are not allotted, sir. That means what? It is part of issue capital, but not part of paid up capital. Are you able to understand? It is part of issued capital, but he has subscribed for it. It is part of subscribed capital, but it is not part of paid up capital. Because it has not been allotted to him. And that is one of the complaints. One of the complaints by the complainant was, my shares are not being allotted, and he gave proof. He showed application forms, checks, bank entry, everything he showed. What more can I do? This is the first ground of oppression. My shares are not allotted. So then immediately the shares were allotted. And then only he became majority man. So that is why issued capital. Please understand. And this is there. Thankfully, the MCF people have not touched that. They maybe didn't understand why issued capital. So they kept quiet. They didn't remove it. Or maybe they understood and they said, better not touch. Okay. Or members holding not less than 5% of the issued share capital of an unlisted company and not less than 2% of the issued share capital of a listed company. Okay. So, of an unlisted company, members holding not less than 5% of the issued share capital. So, 100 members or 5% of the total members, or in the case of an unlisted company, 5% of the members holding 5% of the issued capital. Or in the case of a listed company, it is still less, 2% of the issued share capital of the company. That is what company having share capital. Not having share capital, 1/5 of the total number of members. Straight away. The applicant or applicants should have paid all calls and other sums due on their shares. Okay. This is for shareholders. For depositors, not less than 100 depositors or not less than 5% of the total number of its depositors, or depositors to whom the company owes 5% of the total deposits of the company. So they can make an application. So the requisite number may be of the opinion. The management or conduct of affairs of the company are being conducted in a manner prejudicial to the interest of the company, its members, or its depositors. So here, class action is possible by a group of members, depositors, etc. The limit is slightly lower. Therefore, in the case of a listed company, 2% if you're able to issue capital, you can go. Then, such number of members or depositors may file an application before the tribunal on behalf of members or depositors for seeking all or any of the following orders. So here again, this is called class action. to restrain the company from committing an act which is ultra vires the articles or memorandum of the company. See, I'll tell you one thing. The company may be having a huge tract of land on which the factory is there. The directors are trying to sell it at a low per price, and the balance they are trying to take it in cash or some other method. Something like that. Or outright illegal things they're doing. Or, see, they can't sell the undertaking of the company. Correct? To 181A without such special resolution. So they are doing it. Ultra vires or something which is very clearly mentioned in the articles, they are not complying with it. To restrain the company from committing breach of any provision of the company's memorandum or articles. Okay. To declare a resolution altering the memorandum of the articles of the company as void. If the resolution was passed by suppression of material facts, maybe they are trying to merge with another company without explaining why this merger is needed and all. To restrain the company and its directors from acting on such a resolution. To restrain the company from, do you notice all the words used here? Restrain, restrain. So that futuristic, it's going to happen. The tribunal can restrain, prevent. To restrain the company from doing an act which is contrary to the provisions of this act or any other law for the time being in force. To restrain the company from taking action contrary to any resolution passed by the members. Okay. To claim damages or compensation or demand any other suitable action from or against the company or its directors for any fraudulent, unlawful or wrongful act or omission. The auditor, including audit firm of the company. See, all this is arising out of Satyam. Yeah. Because Satyam, a lot of shareholders were affected, including employees. So they were all class, the employees were a class. So, and they were shareholders also. And they were really panicky. And the auditors were at fault, at least according to a certain view. So, a certain view says that the auditors did not know. So, genuinely, they were ignorant of auditing or they were fraudulent, either way. So, the auditor, including audit firm of the company, for any improper or misleading statement of particulars made in his audit report, or for any fraudulent, unlawful, wrongful act or conduct, or any expert or advisor or consultant, or any other person, for any incorrect or misleading statement made to the company. It's a good provision. I'm very happy. To seek any other remedy as the tribunal may deem fit. So they given an open residual clause again. Where the members or depositors seek any damages or compensation or demand any other suitable action from or against an audit firm. I'm getting frightened. Audit firm. Liability of the firm is firm plus every partner who was involved in making any improper or misleading statement or particulars in the audit report or who acted in a fraudulent, unlawful or wrongful. See, in all fairness, one gentleman, hopefully a gentleman, signed the balance sheet of Satyam. That fellow might have acted in an improper, at least improper, if not fraudulent manner, right? Improper minimum, we have to agree. That being the case, other partners will not be affected, but firm as a whole will be affected. Okay. Of course, in the case of a normal firm, there's an unlimited liability there. But they are very clearly saying the members or depositors can seek only from the firm, its assets of the firm, and every other partner. Every partner was lent. Other than that, other partners' personal assets are safe. Okay, some protection for us. Whether the member or depositor is acting in good faith. So the tribunal will see whether it's a genuine case or whether the depositors or the members themselves are venomous fellows, doing wantedly. Any evidence before it as to the involvement of any person other than directors of the company on any of the matters, A to F of subsection 1. Okay, so maybe there is a small internal fight for which this is being misused, can't be allowed. That the cause of action is an act or omission that is yet to occur. Whether that act or omission would be likely to be authorized by the company before it occurs or ratified. Then you will go back to your good old processes arbiter. See, however irregular you say it is, if the majority agrees, minority, chup, nothing can be done. Unless it is fraudulent or ultra-vires the company. Other than that, any other matter, if majority agrees, chup, that's all. Where the cause of action is an act of omission that has already occurred, whether the act could be or likely to be ratified. So if ratification is possible, tribunal will be waiting, because forces orbital is still a powerful influence. You cannot just like that ignore it. Public notice shall be served on the admission of the application to all members or depositors. All similar applications will be consolidated into a single application, and there will be one lead applicant. So all matters will be done only with the lead applicant. This is one advantage of class action. See, let us say that I am holding 1,000 shares in one company. For me, it may be a big amount. For the company, it is nothing. So suppose I am joining together with about 1 lakh other people. Together, we may be more than 5% or 2% for a listed company of the issued capital. Application is made. But I cannot go every day. So I will sign once in that application or give my consent, and that's it. Thereafter, one gentleman who has got a lot of free time, he will become the lead applicant and he will appear and he will take up the case. 2 class action applications will not be given, allowed to be allowed. If there are 2, they will be merged into one and a single lead applicant will come. That's it. The cost or expenses connected will be defrayed by the company or any other person responsible for any oppressive act. Any order passed by the tribunal shall be binding on the company and all its members, depositors, and auditor, including audit firm, expert or consultant or anybody. Okay, this class action, depositor means a person who has given public deposits. Yeah, you studied it in intermediate, na? Acceptance of public deposit. The depositor is Aam Aadmi, hai na? Poor fellow. He's deposited 1 lakh or 20,000 and you are cheating him. So, yeah, poor fellow. Unfortunate. Okay. So, in case there is any contravention of this section, fine. 5 lakhs up to 25 lakhs. Officer, imprisonment for a term which may extend to. Sorry, these donkeys and monkeys do keep appearing on and off in my classes, right? What to do? So, or fine, which shall not be less than 25,000, but which may extend to rupees 1 lakh. In the case of frivolous or vexatious application, that is, the application is not genuine. It is only meant to irritate the company, or there are people like that. Believe me, I have been the secretary of Tamil Nadu Investor Association. I know how cantankerous some investors, especially the retired bankers and retired gentlemen, can be. Especially clerical grade, they will retire and they will get some gratuity or something that they will put in some fixed deposits or company deposits. They'll keep on irritating everybody, telling this is bad, that is it. Mr. Srikanth, all auditors are fraud. Like that, he will tell me, totally correct, Mr. Ramasamy, what to do? We are all fraud. What to do? Like that. No. I'm not telling you, but generally, series are generally, okay, whatever. So they will be talking like this. We have to accept it, right? Because the elderly gentlemen have years. What can I do? Arguing with him, I can as well bang my head against the wall. That's all. So reasons to be recorded in writing, reject the application, and make an order that the applicant shall pay to the opposite party such cost not exceeding 1 lakh rupees. So that for the fun of filing this application, pay 1 lakh. Okay. 245 shall not apply to banking company. Class action shall not be brought again, because they are also depositors are there. Na? So here we are talking about, as rightly asked by Kaushiki, only about non-banking, non-finance companies or non-banking finance companies who are accepting deposits from the public. Banking companies accepting deposits not covered by section 245. Kyun? Because a doubt cannot be created about the solvency of a bank under the Banking Regulation Act. So you cannot create an impression that a bank is insolvent, because then there will be a huge rush and the bank will become genuinely insolvent. Okay. So no class action allowed. Don't worry, depositors of banks have other remedies. There are other remedies, RBI is there. Don't worry. Subject to the compliance of this section, an application may be filed or any other action may be taken under this section by any person, group of person, or any association of persons. For example, one of the laudable things that investor associations can do is to file class action suits on behalf of the affected parties. But to my knowledge, they don't do that because of the headache, but they can if they want to. Now the provisions of 337, 338, 339, 340 and 341, you will be studying these provisions when you come to winding up. Powers of tribunal in winding up. Punishment for certain activities under winding up. Those provisions shall apply mutatis mutandis or with such suitable changes in relation to application made under 241 or 245. 241 do hai or 245 class action. So that will apply. See, these sections deal with penalties for certain offenses committed by contributories or officers of a company which is being wound up. When you come to winding up, you will study this. Whether it is being compulsorily wound up by the tribunal or voluntarily winding up. Both cases, if the contributories or the officers are found to be guilty of any offenses, they can be punished. Those punishments are applicable to officers and people who are responsible for management of the company when an application is filed under section 241 or 245. These are 337. Penalty for fraud by officers. There is a penalty there. You will be studying it anyway when you come to winding up. The penalties you will study when you come to winding up. That is why I'm not covering it again here. Okay. Liability where proper accounts are not kept. Liability for fraudulent conduct of business. There are penalties there, including contribution and all. Damages to be claimed against a delinquent director. Delinquent means people who have wantedly committed wrong actions. Delinquent fellows. Partners of directors are also liable. Partner be not like partner, business partner. Okay. Wife is not partner there. Spouse is not a partner. Okay. It is business partners. Partner under the Partnership Act, not under the Hindu Marriage Act. Yes, we have completed this topic. Okay. I'm going to give the half an hour. I don't have any questions also to share with you. So I'm going to close the class today a little early because the topic is covered. But if you have any doubts, I'm going to open up. For the next 5 minutes, I'm going to keep the session open for any questions to be asked by you. Any question? Now, feel free to ask questions from anywhere, not necessarily from this topic. Let us use this time. I'm going to keep it open for you because after this class, I may be coming to you only at the fag end of the session, maybe in June. Maybe I'll be coming when I think I'm going to cover some other economic laws, like say, I think FCRA, PMLA, something like arbitration, sort of things. So if you have any doubts, kindly use this. Last opportunity in company law to ask me such questions. In the meantime, let me open up my one more small presentation, which you may find it interesting. Because since time is there, I'm just covering this. Give me 1 minute. I like to organize my stuff in files and folders and all, so that I can easily go and get it whenever I want. Yeah. So if you have any questions, you can ask me. We have about half an hour more, okay, which is there. So Kaushiki says, thank you. That means no more questions. Anyway, see, in your examination, you may be getting 3 types of questions. In addition to the MCQ, I have not included MCQ here. MCQ is one type, but descriptive questions. Okay, where the question and answer has to be written by your hand using kalam. Okay, where you have to likhna, you have to write. Then they could be not one writing A or scratching the thing, no, coloring that small circle. No. Pure theory, straight theory. What are the powers of the tribunal under section 242 of the Companies Act 2013? Never you will get such a question in CA exam. Never. in BCom university exam, maybe you will get. Okay. MCom or BBCom, you will get university exams. But in our exam, never. Maybe they will give a theory, but disguised as a problem, meaning they'll give a situation and then they will say, advise the company on the powers of the tribunal, or even then it won't be like write all the powers. It will be like advise the company on the specific powers in this situation. In which case it will be a theory only, but slightly it will be worded as if with the name of a company and all that. Then you have a pure problem, like I have discussed a few, where they would give you a situation, certain numbers or certain situation, legal facts, and ask you to resolve the legal tangle. Those cases you have to think carefully and find out which topic this is covered. If you know the sections are all good, then represent the facts, rewrite the facts. Don't mean in such a way that they will come within the framework. Then this is where if 4 marks have been allotted for this question, 2 marks are going to be reserved for you writing the law. Meaning, write the provision in 3 lines, 4 lines, simple lines, the way Sriram writes. Nicely you write it. Write the law. 1 line, 2 line, maximum 3, 4. Write the law. That's all. That much only you will need to write. 4, because it will be one specific provision. 4 lines. Then apply the law to the fact. Then say, in view of the above provision. Or you represent the facts, then there is no section, maybe there is a case law, then you write what you think is correct, and then say, the above view is supported by so-and-so case law. Then finally, see what is the question they are asking. Very specifically, they'll ask, can Mr. R be appointed as director of the company? Then your conclusion should be, therefore, Mr. R cannot be appointed as director of the company. 1 line conclusion or maximum 2 lines conclusion. That is all. If the question carries 6 marks, you'll get 5.5. 4 marks, you'll get 3.5. If your handwriting is good, 3.5. If not, even then 3. So this is how you have to answer question in the exam. This is just since I have a little time, I'm giving this as bonus. So Sriramji, thank you for using very happy. Thank you very much, sir. I'm also happy that I could come and take classes. Thank you very much. I had a great time with all of you. Of course, I'm not going away. We'll meet again in Inshallah. We'll meet in June. Till then, saying goodbye to all of you and looking forward to interacting with you again. Bye. Have a great evening. Enjoy the weekend. Enjoy, no? Study. No? No enjoyment till you become a member of my institute. Okay, sorry. No, you can still enjoy studying. Enjoy what you do. Okay, enjoy. Bye. Sir, class over, sir. Ashok ji.